Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap for Friday, Ugly Friday, December 14th. We broke support in the market today. It sold pretty consistently throughout the day. It wasn't, tremendously scary when you look at it in hindsight, because it kind of just kept going down. Not huge moves, each step of the way, but just a drift. Couldn't even get the psychological close above 2,600 on the S&P as we closed just a point below that. And good afternoon, Thiago. Hope all is well, and hope everybody had a good day trading here today and are ready for a weekend. I hope it's warmer where you're at. It is cold in Utah today. And I guess I should probably expect that's going to continue for a little while. But a man can dream, right? So, looking ahead to next week on the earnings front, another fairly boring type of week, but we do have a few companies, Oracle, Nike. For some reason, it's not coming up here, but Western Boots Alliance is there as well. WBA, FedEx, Micron. So we have a handful of interesting companies reporting here next week on the earnings front. The last week before Christmas. Wow, crazy to even think about that. But hey, we'll deal with that next week, right? We got things to look at this week. So over in the S&P 500, we did take out support. We gapped on the open, on fears. I was thinking to myself, like, what could actually really actually make the market happy? Other than honest resolution on the trade front, maybe, actual, like we're going to get that, right? Overnight in the futures market, we're going to hear we're progressing plenty of times. But really, with the market, that's the only thing that comes to my mind when I think about what could really get people to say, yeah, it's good times again. Whereas anything can spook them right now, right? A fly sneezed. Do some selling. Let's gap down the futures. We gapped down, and we just kind of drifted. It was kind of an interesting day. If you look at it from an intraday perspective, nothing really exciting technically on the intraday, but it was one of those, pretty small candles throughout most of the day, just kind of step by step, going lower and lower and lower. Did see a little bit of buying, to probably short covering there at the very end of the trading day, but we were really closing pretty darn close to our bottoms. I want to come into a weekly chart because now we're going to kind of want to do that. I think you have to call that a close below support. And I think you have to call a close below support a bearish signal. And we're seeing in a lot of places, not just the S&P, looking at kind of where our next level of support is. Hey, it could fake us out. We know how volatile this market can be, right? Monday, it could gap above that, and we could be having a much different conversation. Oh, it was a fake out, support's holding, right? But as it is right now, I think you have to call it a bearish signal. We got a ways to go down into the mid 25s before we are going to be testing an old level of support here on the S&P. So, be cautious from a bullish point of view would be my my opinion going into next week. Not like we've been crazy bulls, right? But I think breaking support in the S&P is definitely a little bit of a red flag. Over in NASDAQ, it had a pretty rough percentage day. Our biggest losing index down over 2.5%, but it didn't break support nor did it test support. And so it's kind of in one of those weird spots that I think in some ways might be interesting for us if we continue to see selling within the S&P, within the Dow. I would imagine the NASDAQ's going to get in on that party, and they'll just kind of be dragged along with them. If we see buying, pop back into that, if this does end up being a fake out, maybe we can actually continue to work on this pattern that still, still is there. We still hold that higher pivot low right here. So that is still there. About the only bullish thing I guess you might see today, but it is still there. Clearly a gap down on the open, showed a lot of weakness over in the NASDAQ as well. Very similar behavior on the intraday over there too. And same with the Dow Jones. Now we've got that big round 24,000 on the Dow. I've heard it many times, both on TV from other traders, on words, on little news stories and things. We've seen it bounce. That was our bouncing point last week's big sell-off. Keep an eye on that. That is a support level. Again, as we kind of project ahead, there's a ways to go though. If this support level breaks, and then we got a little ways before we have to test it, but there is definitely more room to the downside. I think any hope that we had for a Christmas rally, I think today's break of support, if you had it, it probably took it, whatever was left. So keep an eye on these old support levels. Obviously, those should be challenges. If we pull back into them on the intraday, could open up some opportunities for some short trades on the intraday basis. If we can push back through it, well, okay, we'll talk about that if and when it happens, right? So over on the Russell, it got real ugly real quick. And of course, this has been the weakest. These guys have already broke support. So the rest of the indexes, according to the Russell, are a little late to the party, right? They'd already taken out their support level, working into very, very close. I don't think they quite hit 14, but they were really close. I think I saw them at 1407 is the number that I saw them at. That should be an interesting price. It really should. It was an old resistance level. It is a big round number that, of course, the market loves big round numbers as a general rule. If that falters, really, my expectations are it should put up a fight. We're in that downward trend. I'm not going to bet on it, but I'm not going to bet against that support level holding. I'll assume it's going to try until it fails. But if that fails, there is some more room to the downside in my mind on the run. Realistically, into these old lows, this 200-week moving average, these are probably the areas that I will be looking at if we break to that below that 14. That number seems like it should be important. We have history there. More than that, again, it's one of those numbers that are easy to throw out there. No one throws out 1407, right? They throw out 1400. So as you can see, it was a rough day for the market. Certainly breaking that support didn't do it any favors. So as we go into, and I saw this as I was scanning, as I told you guys before, every Friday I kind of scan through the S&P 500 looking for trade setups for the next week. I like to have trade ups of both varieties, like we all do, bull setups, bear setups, and I try to keep an open mind as a whole. Yeah, some areas I'm only interested in bullish or bearish based off of how the individual sector is performing. But the thing that really stood out to me today as I was doing it, I was having a heck of a hard time finding anything that looked like it could trigger to the bullish side. Now that doesn't mean it can't by any means, but the setups that I was finding were predominantly bearish setups. I found lots that were interesting, I thought, whereas on the bullish side of things, a few interesting pullbacks in the real estate department and things like that, but definitely very one-sided, at least at my first pass through the S&P for setups. And again, we've talked about this before many times. The problem is it's so ugly. Even if folks want to buy, it's always ugly, right? Whether we're talking about an individual stock or the index, there's always something in the way. Should be interesting next week. I would expect, and again, I don't know the future, but I would expect as we kind of wrap up next week, we should kind of see volume start to lighten up as we kind of go into our holiday turtle shell. Typically, the market does kind of do that. Volume drops during the holiday season. I'm definitely interested in thinking about, credit plays over the holidays. More particularly, I'm leaning towards, the bear call side of the credits personally than the bull put sides. Not to say I couldn't be, convinced otherwise on an individual basis, but I'm about ready for a little bit of a slow, boring week. I don't know if we're going to get it this year. A lot of times it is dull during the holiday season, but we're still seeing plenty of movement, right? So, yeah, it had a couple days of taking a little breather and it's back. So didn't fool anybody. Over in the materials, relatively speaking, held its own today. I think more importantly, as we took out this little support floor that we've kind of built up over the last handful of trading days, we still have this shadow That will probably depend on your rules. It's the eternal question. Does the bottom of the shadow count, or is it the body? And there's never one answer that anyone can agree on. So, I've asked that question many times myself. I've answered it many times myself. Saying it depends on you. But we did hold up a little back and forth. We're still, now we've, clearly, failed at resistance. Now we've clearly made a lower high. Now we've clearly, at least today broke through support. So this, overall does continue to be, in my opinion, a bearish area. We still do have a support level. It hasn't taken out that kind of last line of defense like some other things have. So there's a little bit more room to the downside in my estimation within the material sector. Energy is going to, and good afternoon, Whitney. Hope all is well, my friend. Energy is going to make it interesting going into next week. We filled up that space. All right, we've been kind of looking at that space. We knew that's the support bounce, from back in the day was something to be keeping an eye on. At least for today, that is what kind of propped us up and held us looking a little bit further back now if that falters. And I personally am still remaining bearish on the energy sector overall. So I'm, again, never going to assume it's going to break, but I'm going to plan as if it is. There's a little more room to the downside before we kind of get into another level of old support. And so I would expect this support level to be an interesting price, maybe see a battle. If we rally back up into these old highs, that would be pretty awesome. If we were able to do that, we got it last time. It happened so quickly that if you weren't kind of at your computer looking at the chart when it happened, it was very difficult to trade. I think hopefully, if it does play out that way, we can get that nice smooth rally. Yeah, right, in this market. But hey, we can hope, right? So we can watch that old support level as resistance. Keep an eye on this support level. If these things break, should be interesting. A couple of interesting things. I have to move my face right there. If you look at some of the energy stuff, energy's in a weird spot right now. If you look at a couple of the energy stocks like VLO, for example, they're at a major testing point. This was a major breakout. We're looking at a weekly chart here. So this was a very big time double top on the stock. Of course, it ended up being a fantastic break on the stock, and now we are testing it kind of as a support level. You're seeing something very similar with Marathon as well. So we're still seeing a handful of these big, these are some of the top holdings within these sector ETFs. Some interesting holding right now, but if these things break, that's probably going to put that pressure on that low that we're looking at on the ETF, probably create more opportunity to the downside. At least that's how I'm going to approach it. But I do find it interesting when things are testing those major levels. Those should be tempting prices. I mean, who doesn't want to buy a retracement to the breakout point? Maybe we don't want to do it today, but just from a chart pattern point of view, that is a pattern that I like. I know a lot of traders like that. So it'll be interesting to see how that plays out. Over in financials, I mean, it's still just gross and ugly and beautiful if you are a bear, as it continues to really show no signs of life. We have a little room to go before we work back towards a previous, support zone. So there is, in my mind, at least a little more room to the downside here before there's even a tempting theoretical floor bounce. I'll be kind of keeping an eye on a little north of 24 over on the ETF. You guys don't need me to tell you how ugly most of those financial charts look. It is not a pretty sight. Industrials kind of joining in potentially with the financials. Unlike the financials, they've been able to hold their support level until today with a nice clean close below that old support level. If we show a little more downward movement, I mean, there is some really interesting. I mean, this one, if you go to a weekly chart, you don't even really know where to kind of say the next level is. There's no real major levels of support for quite some time. We have a little mini breakout point back here, and you guys know I can't draw straight lines. So there's little old resistance levels and support levels along the way. Any of them could catch, but really, there's just not much technically from support perspective to want to prop it up. It better hope it's a failed break, I think, because I do expect more room to the downside if this is going to run that way as well. And this is just the theme. I mean, and of course it's the theme. When things are breaking support, you're not going to find a bunch of nice textbook bullish retracements, unfortunately, whether you want to or not, right? Over in the technology, much like the NASDAQ, definitely down today, definitely one of the biggest percentage losers on the day. But on the other side of it, maybe from a technical point of view, one of the bigger winners on the day by default. We didn't break support, and we didn't test it, but that's not a bad thing either from a bullish perspective, at least. I do think we continue much like the NASDAQ, see how we develop. We do have that higher pivot low, but that can be taken away from us as early as Monday now, right? So we can keep an eye on that to see if we establish some more momentum within that sector. And I would be happy to see that if that's the way it wants to go. But as it is today, a lot of selling within that. Again, many of those charts are downright just ugly from a bullish point of view. We still have some support. And again, this was a pretty significant support level. It's not like just a previous swing low in my mind on the technology ETF. So we are, dealing with a fairly substantial, in my opinion at least, level of support propping us up there. Over in staples, they were not immune. The defensive stocks were not completely immune to the selling here today, closing right back at support, and very troubling. And again, we'll have to see it play out a little more. Now we've got an even lower high. So now we're seeing, all's good, pull back, great. Everybody's happy about that opportunity. Everybody has a great week. Kind of falter out without challenging resistance, back to support. Okay, it happened, support held, that's important. Rally up, and now we've got another lower high. That, from an overall sector perspective, really does not please me. And I've kind of, talked about it this week. I've really fallen off personally this sector as a whole. Individual components within the sector I'm still open to, but as a whole, where I was thinking, like I said, we all were together then, right? We were excited for this pullback back here. Find your staple, any staple, and let's get going. I think you want to be really picky. And if this support breaks, I do think you have to call that a bear signal. I really do. I'll call it a bearish signal if this support does falter. That is for sure. So not loving the way that's developing. And right now, from a buy side, I really think you have to almost break back up here for me. So it's going to be a little while in the making if support holds, and it very well may. It's been holding, right? It's been interesting, but it's been holding. And so I'm not going to be terribly shocked if it does. But now we've got a lot of challenges. Now we rally back up into that 50. Does that act as resistance? It can. Maybe it does, maybe it doesn't. Then we run up into the falling at 9, falling 20. So we've got a lot of overhead all of a sudden. That was what was so appealing about this sector for a while, right? It was kind of smooth sailing. It pulled back, didn't have these multiple levels of resistance that so many of the other sectors did. Now all of a sudden, well, we're starting to see them develop. For me, at least, I think a more neutral stance, until we see how we're going to play off of this support level is the right approach to the staple sector as a whole right now. Utilities, of course, utilities. You gave us a few glorious days when you finally did break. And we're just hanging out at resistance still, right? Now we're going over a week of trading now while we just continue to test that resistance level. Again, a lot of the individual components of this ETF have already broke resistance, but a lot of them haven't. We'll just continue to monitor it. Again, we're not surprised that it's putting up a fight there, right? The only thing we know for certain is last time it got there, it was a big deal, right? We don't know what it'll be this time. But we're not surprised that it's at least acting as a little bit of a challenge. I still think that a pullback would be the ideal situation within the utility sector for that as an entry point. But, again, I think we can be stock pickers within this sector right now. I have no real objection to folks looking at it from a bullish point of view. Just that resistance, I'd like to get through it or at least pull back so we have a little more room to run and take that break. But, hey, if we want to consolidate for a little while, that's what we're going to do. Over in healthcare, they proved that no matter how much you love something, you don't want to marry a stock, right? And it's a good, I've learned that lesson over the years. And here today, they worked into that trend line, took it out like it wasn't there. We saw that in natural gas too, as we'll see. But it worked back into that old trend line and just flew through it like it wasn't there, working all the way back down into our support level. Now that support level did hold, and so that is a positive in my mind. Where we got there ugly, right? But again, we did it within an ugly day. If this support level falters, though, you got to call it what it is. It doesn't matter if you like a sector or not. there's more downside. Now, I would argue that watching that 200-day moving average, which I'm a believer in as acting as a technical catalyst, and that's going to kind of line up with these old lows anyway, probably can easily fill that space. If it does, break through there, I can understand someone buying today. I would be terrified to do it, but I could understand it because I would have been terrified when we were down here on the intraday. I would have been terrified when we were down here on the intraday. So I get people buying off of that support level if that's how they trade and if that's in their system. I'm just a big wimp. If we do falter, though, I can't see why anyone would buy it until we worked down, into that 88, 87, 75 type of a range. So there's a little more room. If we do get an upward move early parts of next week, keep an eye on this old trend line. You'll see it time and time again. Obviously, nothing is ever 100%, but you'll see time and time again where old trend lines that were acting as support end up being the resistance level. So we're a ways away from there. We may not ever touch it, or at least in the immediate future. But if we do get some rallying off of that support level, wouldn't surprise me. Just keep an eye as we approach that. Now, again, we'll kind of watch it together. But in a market like this, that can happen in a day, right? We saw a few of our pullbacks, have that happen to us over the last couple of weeks. And over in the discretionary, really, again, same song and dance, but we were able to close above support. Now, again, the tough question with this one is, are we looking at this bottom or are we looking at these bottoms? Well, today we don't have to make a call, right? Today, whichever one we're using, it closed above it. It was ugly. It was a very bearish candle, no doubt, but we did hold support over in this sector. I have a hard time loving this sector. If we break out, that could be a different thing. But I have a hard time until we finally ultimately break resistance. And hey, on a positive note, from a buy side, resistance just a little while ago, it had to break 112 for a buy. Just a little while ago, it had to break 110 for a buy. Now, all of a sudden, it has to break 106 or 107 if you're worried about the 50-day moving average as a buy, if that's the way it develops and that's the way we want to go. Obviously, keep an eye on how we respond here. Again, so many charts in this sector are just big gap down. So many of those retail companies have really caused it problems. We had so many of them gap down on their last earnings, whether it was missing expectations. A lot of them, kind of lowering forward guidance seemed to be kind of the hip trend this earnings season for a lot of the retail companies. And so they're definitely, those ugly charts are playing a part. But right now we did hold support. I think if you go bearish, if we break this support early next week, I think as long as your individual stock is breaking support or in a nice, overall position from a bearish point of view, I have no objection to trading it. It wouldn't keep me from going bearish within the sector. From an ETF point of view, this drives me nuts. I hate these things because I'm going to call it support, whether I should or shouldn't. I'm going to say that it is support because it did stop going down there and started going up. I don't know how important it is. Only time will tell, but I can't not call it support. I hate it. If this candle wasn't here, I'd love this chart. If it broke down early next week, I'd love it as a bearish candidate. But this darn candle, I always have a hard time with those. Over in real estate, there are some interesting retracements within that sector. They're not ready, I don't think, to jump in as early as Monday morning. And overall, they look a lot like this ETF, where they're a little bit below their shorter term averages, not specifically their trend line. Some of them will be, but there were some interesting pullbacks, I thought, in that sector. If we see some upward movement, I could see this being an area I would be interested in from a bullish point of view. One of the very few, because I'm really, at least broadly, I'm not really broadly interested in anything right now from a bullish point of view. Utilities, I'd be a lot more interested if it broke. Healthcare, I was a lot more interested when it was holding that trend line. Staples, I was a lot more interested in when the trend was very easy to identify and we weren't seeing decreasing tops. So this is one of the few areas that I don't hate, but I still hate that we're below this trend line. And so that will be something I'll be keeping an eye on. And if we see that movement, keep an eye on 34 again. I know we took it out. We got a nice close, but you got to call a spade a spade. I mean, it was a failed breakout as we speak right now, right? It didn't happen on the intraday, but it has failed now. So I do think we want to watch 34 if and when we approach that again in the days to come. I wouldn't be opposed to, scaling out or selling a call or something against your position or my position, I guess I should say. If I was at $34, it wouldn't be I have to sell, no questions asked, but I'll be keeping an eye on it if we get back to that price point. And over in communication services, they held their own. They really did. And they kind of have that same type of a pattern thing developing like the NASDAQ, where it hasn't done anything good as far as breaking resistance or anything like that, but we've now recently placed that higher low, seen some upward movement. And again, it is one of the areas that didn't break support here today. It's a pretty ugly candle, closing at the bottom of the day, but everything was a pretty ugly candle today, one way or another, but showing a little bit momentum in the form of creating that higher low, obviously a ways away from being a bullish chart. But, if there is going to be some strength within this market, it's going to have to come from somewhere, right? And why not? Why not these guys, right? We'll obviously follow that along together. But right now, really not a whole lot has changed. We're making lower highs. So anything you're bearish in, I can't really argue too much against it, and I wouldn't, as long as its own chart, was on point. But if you're sitting it out and just waiting, this higher low, it's there, and it is potentially a shift in momentum. That's how it happens, right? It hasn't happened yet, but that's kind of one of the key first steps. I'm leaving this one alone as a whole while it kind of shakes out personally. So, it was ugly. Things are ugly. Things are breaking support. Things are at support. Indexes breaking support it's never a good thing, right? It may, be a fake out. A week from now, we might be, back up at 27 saying, wow, just think last Friday we were talking about a breakdown. But until it happens, I assume it's a big deal. That is, you're not supposed to break support. And when you do, it's definitely a cause for concern. Volatility did spike back up a little bit here today. We take a look at the VIX, and of course it did, right? On a day we gapped on the open and really never even tried to establish any, it's a sweet deal, let's buy it. We basically hung around for a little bit and then just chopped our way down slowly but surely. So we did see a little bit more of an increase in the volatility index here today, as we're still generally in the top end of the range that we have been working with as of late. Over in the dollar, we ran right up into resistance. We did sell off of that on the intraday. No huge deal, makes perfect sense. If I was in specifically this, I would have done the same thing probably. So no huge deal. Overall, a very strong day. We did sell off of the highs, but it makes sense, why we did it there. At least to me, that is a sensible, reasonable thing to understand. Obviously, we'll keep an eye on that. A break of that would be a nice, clean technical break for sure. Overall, it does continue to be a bullish area. As I've said before, anything that you're really doing from a bullish point of view, as long as we're above 96 as it currently stands, and at the very least, at least we're above that 50-day moving average, I really have no objection to, as long as it fits your trading goals. But a very strong day, nice little movement over there. Now, in our metals, interesting day, I don't know how much you guys were able to follow on the intraday, but our gold did have a very steep sell-off testing this breakout point. I don't know if you saw it on the intraday, but it was hilarious. It was zoom, a huge red candle, and then this is where it's going to be a little bit below 1240. It is 1236, 1237 is where it kind of bottomed out, and then just kind of springboarded up for the next couple of hours, as we weren't the only ones, kind of wanting that pullback to that breakout point. We've seen a little bit of confirmation to prove that here today. Some buyers definitely willing to step in off of that price. It kind of jumped, a little more, maybe more than you want. But if we're able to continue this momentum, it is a pullback. And again, as I've said before, and I think a lot of the coaches over here, and I think a lot of you guys are looking at it the same way, as long as we're holding this breakout by our own rules, it's a bullish area, in my opinion. It's just, you want to be buying it at good times, right? You don't want to be buying it at resistance. You'd rather be buying it at support, all that fun stuff. But I really have no objection to folks, working into this on a pullback. If you feel the risk to reward is there, as long as this support holds, I'm not really going to argue against that. I will continue to maintain that you should keep a close eye on the 200-day moving average if and when we get there again. I know I will be keeping an eye on that if and when we get there again, but we're a ways away. So we at least have another day before we have to think about that. Over in silver, and again, no surprise, we saw a really nice run up towards resistance, towards 15. Then we saw a doji yesterday as indecision came in. And of course, the most sensible, logical thing to happen was it was going to struggle at resistance, right? And that's exactly what we did today. So no real surprises, I don't think, over in the silver market. I think that's a good thing. If you are looking at silver from a breakout perspective, I think it's always easier, at least. Maybe it's not better or anything like that, but I think it's easier to trade breakouts if we run to resistance, then pull back a little bit, and then take another run, then run straight up to and then through resistance, because our eyeballs say it's overvalued. They're not necessarily right, but people do have a hard time, with buying when we go straight up from support to and then through resistance on breakouts. And I know I prefer when we pull back off of resistance, consolidate resistance, as opposed to just shoot right up to it and break through it. So if you have been watching for a breakout at $15, again, don't assume it's going to happen, but probably should start thinking about what your game plan is, because it could happen early next week, if it is as early as next week, if it is going to happen. And again, we might be working back down to 14, because let's call it what it is. Right now, day to day is always interesting, but we are very sideways, right? We're very sideways. When you look at this weekly chart, it does illustrate that point, but it also, for me at least, when I look at this weekly chart, it makes me like the break of 15 even more from a technical point of view. I don't know if you guys feel that way, but we are in a nice long sideways, trend. So if we work our way back down towards the lows, like we've done on multiple occasions, none of us are going to be caught off guard with that. Over in natural gas, a very interesting day in natural gas. As it worked, it's sold, and it really, was closed at its 50-day moving average. I think we can watch that as a potential catalyst. I don't think you can ever buy a candle that looks like this. If we see some upward movement or something like that on, go early next week, I could be persuaded. Today, well, yeah, I'll never buy a candle that looks like that. And the 50, I do think, is worth monitoring, but I do think from a, more, practical point of view, it's probably this old breakout point is probably the major level of support. The 50 could act as a catalyst, no doubt. But I think this breakout point where this, where we saw, that nice run should be something to watch. Now, what was really interesting is when we kind of broke into a couple more lines, as embarrassingly bad at it as I am. Yeah, that's not bad by my standards. Well, that's not good. So, of course, we took out that 425, worked down, put in a higher low, had a nice rally. And then, of course, that kind of falters for us. No big deal. There wasn't really a lot of support other than a little swingy low on an hourly chart here, right? So not the world's strongest level of support. But what really was interesting to me, because I've heard for a lot of different places, that we got to 4 and we didn't even try. When we got to that $4 mark that, a week ago, 2 weeks ago, we probably were wondering if we were ever going to see. But here today, it gets to it and nothing, nada. Nobody's willing to even cover a short it from the looks of things. It just fell right through that $4. That, I don't know exactly what to make of that, but I don't think it's good. I don't think you can go bearish on this chart just yet. And I don't know that you even should be thinking about that. But that, clean break of 4, once it broke 4 and it's selling off, that makes a lot of sense, because the fact that it didn't even try to bounce off of 4 weirds me out a little bit. I'm interested in seeing if buyers are willing to step back in, whether it's off of the 50 or off of the breakout point, and kind of see how it develops. But I thought that was really interesting that it didn't even try. I would have liked to seen it try. And lastly, over in crude, surprise, surprise, nothing to say. Nothing to see here other than we continue to go range bound between 50 and 55. The longer we go through this, honestly, the more excited I am because, again, it's not that you can't do it, but it's hard. It's a lot harder mentally to go into a breakdown if it doesn't take 5, right? There was a break here but we already went down a lot. Doesn't mean we can't go down more, right? There was a break here really fast and to the point. So, hanging out building a little bit of a floor, never a bad thing from a breakdown point of view. But again, we kind of talked about over the last few days, as we go into this sideways range, longer and longer and longer, again, 2 weeks ago, I would have said you can't buy above 55. I would have said that. I definitely would have said it to myself. But here today, I have no objection to it. If we do break to the upside, I would look at it, like I said before, from a shorter term perspective. I wouldn't be calling it a bottom necessarily, but I do think it would be a bullish signal that is tradable, just like the break to the downside below 50 would be tradable as well. If you kind of look at it now that we're kind of on a weekly, and now it's starting to say, okay, now we're really starting to go into that trading range. Wouldn't mind seeing it happen for another week or two, to be quite honest with you. We got other things that are moving. I wouldn't mind having something boring to do some cash flowing on and wait for a break on. I don't know about you guys, but I'm okay with that. If you want to be dull. Speaking of dull, as we kind of wrap up our recap, did you guys see we threw out Insights chart over on our Twitter a little while ago? Just found it really funny how range bound they have been through all of it. The good summer, the rocky fall. Back in April, they gapped down on what I would assume was earnings, and basically it went in this enormous, boring sideways range. And I got a kick out of it because you don't see that very much in this market. It's like they're immune to it. They don't care about the volatility. They're still refusing to move. I just thought it was funny to look. So, did you, Scott? Yeah, I could understand. So yeah, you wouldn't mind a little boringness in the crew today. Yeah, I'm with you. I'm a little more skewed still to the bearish side, personally from a credit perspective. But I understand, going into it from a credit point of view as well. And I haven't had a chance to check the options on Insight here, but I think I'll do that over the weekend because anybody who's this boring is my cup of tea. There's no doubt about that. So with that, ladies and gentlemen, that'll do the market recap for today and for the week. Certainly was interesting. A lot of movement, had a couple days of, trying to figure itself out. Yesterday and maybe on Wednesday, clean break to the downside. Again, obviously, when you're going through your watches, you guys are almost certain to see the same things that I'm seeing. A lot more bearish setups than bullish setups. That's what the market's doing. You go with what the market's doing is of course always my opinion of it. But do kind of go out of your way to find some bullish trading opportunities because that might be the way it develops next week too. Obviously, we'll have some for you over in our scouting reports this week. So make sure you're catching the newsletter and those reports. In addition to going over your own routine and your own watch list. But make sure you're also, spending a little bit of you time doing the things you love with the people that you love. And so you're refreshed, ready to rock and roll on Monday morning. With that, ladies and gentlemen, that'll do us. So as always, you guys, it is my pleasure, everybody. Thank you so much for your time. Be sure to subscribe to the channel and hit the notification bell if you're new here and haven't done so. And also follow us over at Tackle Trading on Twitter if you want to kind of keep up with some of the things that we're running into on a day-to-day basis. If you enjoyed the market recap, it is always helpful and appreciated if you do give it a thumbs up just to let us know that we're on the right track over here. And with that, guys, get the heck out of here. Have a wonderful afternoon, a great weekend. Happy trading, and I will see you in the next one.